Spoken a lot about auto loans here in the US. Spoken a lot about auto loans in the US and how the amount of debt is spiraling out of control when it comes to this in the US. 1.66 trillion, and that number is only going up every single year. And as a result of that and a few other things, people are going into what is known as car poverty, or poverty just in general, caused by their car. Of course, people need cars to be able to get around, care for their family, go visit relatives, go on holiday, be able to carry out their work as well. It's something that is a luxury in a sense, but it's also a necessity for most people. But what are the ways that people are going into car poverty that you might not even be aware of? Let's have a look, guys. Here are some examples of this. Well, the first one really is down to the fact that car loans are a lot less regulated than something like mortgages. Getting a car loan is really easy. There's not a lot you really have to do to prove that you own. There's not really that much that you have to do to be able to prove that you can afford it. A lot of these checks are very lax. Some lenders are very strict. You have to prove certain financial obligations can be met. But for the most part, no, not really. You just have to claim that you have the money. If you don't actually have it, then they don't really care, as long as the money keeps coming in. And if the money doesn't keep coming in, they'll just take the car off you. They get their money either way. For example, when you get a mortgage, the lender will check everything from your pay stubs, bank statements, your income, assets, debts, credit card statements. They will do everything. It's like a full-blown CIA investigation into your life. Like, they want to know everything before they approve you. And if they see anything they don't like, get out of here. You ain't coming back. We're not going to lend you money. Car loans, though, they don't, like I said, they don't really care. As long as they get their money, that's all that matters to them. And even if they don't, they'll just take the car off you. Another problem is very much people viewing vehicles as status symbols. Now, again, it's all about what you feel like you can afford, rather than what you actually need. Some people can afford a very expensive car, but some people want to look like they are rich, rather than being actually rich. You can always tell that it's a bit dodgy how some people prioritize having a flash car compared to having a mortgage, compared to having a nice home to live in, because not everybody's going to see your house. But if you're driving around going to work, everyone's going to see your car and make assumptions about you. Some people just plain overreach when it comes to the car that they go for. They go for something that really they shouldn't be able to afford. But they push the boat out and they try it anyway. And something else as well to bear in mind is the fact that people get into what's known as negative equity. I've already spoken about this on a video that probably goes out at the same time as this one, really in truth, where essentially negative equity when it comes to cars means that you're paying more money than what the car is worth. And that happens a lot. And the amount this happens, and the amount that this goes up is really, really severe. It can be easily 10k. Now, with something like a home, it's very hard to get into negative equity for the most part, because in general, the prices of homes, the prices of property does go up over time. Cars, though, are different. Yes, some cars do go up in value. The very high-end ones, the classic cars in general, they will go up over time in terms of the value. But the ones that are mass-produced, the ones that us mere mortals can afford, those actually go down in value immediately. So you're already losing money on it straight away. Of course, it serves a purpose. You get your money back, you get your return on investment just being able to do your job and stuff like that. But when it comes to the end of your car loan, usually you'll have lost a lot of money on it. And because of that, they can't really afford to go for something as good next time. So again, they take out a bigger loan, and it's just a spiraling things like that. And then if they lose their job, oh man, that doesn't even bear thinking about, does it? But yeah, those are some of the things that people do to get in car poverty. Some of the things you should very much try your best to try and avoid. In the end, just be careful with it. Don't overreach. Don't overextend yourself. Think about the worst case scenario. How would you deal with this if you lost your job? How would you deal with this if you crashed the car and it was your fault? You got to think about these things. You need a nest egg. But yeah, those are my kind of top tips on that, guys, and things to avoid. Let me know yours in the comments below. Like, share, comment, subscribe. As always, have a fantastic day wherever you're in the world today, and we'll see you very soon.